if you look at what is happening in the current context, post the Great Recession and post-COVID, because of the fact that this excessive reliance on monetary measures, for example, had resulted in a situation where this huge amount of cheap liquidity, initially because of the fact that you actually, the great moderation, which resulted partly from the relocation of manufacturing capacity to the low-wage regions of the world, which therefore kept inflation of goods and services under relative control. And the fact that for a long period of time, the international system, because of the lower growth associated with the neoliberal era, could keep commodity prices down, including the prices of oil, resulted in a situation where inflation, in terms of inflation, the prices of goods and services was not seen as too much of a problem. And therefore, you ended up with a situation where central banks increasingly were not anymore worried about inflation targeting as they were earlier obsessed with, but really were concerned with actually putting liquidity into the system in order to be able to support the financial system. Ever since Greenspan made that statement in 1987, that was an important component. And this has resulted in a situation where you have had not merely a high asset market price inflation in the developed countries, but you saw this huge carry trade where this cheap money was borrowed and taken into developing countries, such that there is this large volumes of legacy capital which exists in many developing countries. And as I said, not merely the so-called emerging markets, like say India or Brazil, North Thailand, but also many of the frontier markets, where bond markets have actually become things which you target because of the fact that you're looking for new areas into where you can pump this cheap liquidity. Now, if you have that legacy capital and you try to make this transition to doing the kinds of things which you need, both in terms of sort of stimulating expenditures, which take you in the direction of where you want to go, and making the structural changes needed to ensure that money would flow into areas where the social benefits are large, but the private profits may not be great, could actually trigger a situation in which you would see some degree of exit of this large amount of financial capital, which is the legacy capital which is accumulated over these years. Now, in addition, because of the fact that as you continue to do this, at one point of time, we now return to a world where inflation is once again a threat. The great moderation seems to have been put behind. And therefore, these countries want to unwind those policies. And when they unwind those policies and interest rate goes up there, in any case, there would be a tendency for capital to move out. Now, this would obviously mean that the sort of policy space needed to do the kind of things would become difficult to carve out, because of the fact that every time you try and do something, you'll accelerate the exit of capital, and that could actually trigger significant currency depreciation, a financial crisis, bankruptcy of firms which are exposed to international debt, which now in local currency terms would be much more expensive. And you could have actually debt deflation leading up to a recession and a depression in all of these economies. Now, this essentially means, I think, that there would be a period in the transition in this journey when governments would have to accept a certain amount of pain in order to be able to carve out the policy space they need. And I think we need to face up to this, because not facing up to this has essentially meant that in many countries where left of center or even progressive governments come to power, they come to power with promises, but once they are in power, they cannot do what they want to do, because of the fact that they haven't actually got the strength, perhaps the social sanction, to be able to actually allow that period of pain when you move into a situation when you can carve out for yourself the policy space to do the things which you need to do to get up, to start walking, and then proceed on this journey which will get us to where we want to go.